I always talk about clean and simple bases. We're going to show you a bunch. You can say, well, that's kind of choppy right here. How about this? Clean and simple base right here. Just going across the tops. It's nothing fancy, okay? And what do you want to see? And I say this a lot. I've said this for years. People talk with their mouths and vote with their pocketbooks. Go where they're voting, right? Isn't that what you want? And how's that confirmed? Good price action combined with volume. They're buying the stock. Look at the bar right here. You want to see something? You see this right here? Good volume on that bar, right? Good, I mean heavy, much heavier than average daily volume. I'm going to do something for you. We're going to look at some charts here, by the way, folks, okay? It's going sideways. Lifts off on good volume. Look, this is average daily volume, folks. Dramatically higher than average daily volume. And it pauses just a little bit above these highs. We say, okay, so we started. Boom. You think we're the only people in the world that saw this? Then everybody says, yeah, this is pretty dang good. Look at the volume on that bar. It exploded. And that, running up, that's good money, folks. That's not, you're not going to sell at the top. But, you know, you're 70, 80 points pretty quick. I don't think that's too bad in about 6 days. Please note this, by the way. They all don't do that. Okay, I'm not conveying that message one bit. Okay, but this was a leading stock in a leading group with great earnings and our great sales and a high composite rating. That's the key, high composite rating. And volume talks. People talk with their mouths and vote with their pocketbooks. They voted. They voted. So you got fundamental analysis and you got technical analysis. We combine both together. So that's what we've got going on there. All right. So we've narrowed it down. We focused. We've got the big picture as far as fundamentals. And we even took it a step back beyond that. Why are we doing this? What is your reason? What is your rationale for investing? Concentrate on that. Now you've got a goal. Now we sit there and say, Pat, I know what to look for fundamentally. I'm going to look for stocks with great earnings and or, I didn't say both, and or great sales with a high composite rating. And they're near 52-week highs, within 20% of 52-week highs. And they have a base pattern that everybody in the world can see. If you focus on those, you will make money. It will help you. And now I need to flip that coin and talk about the negative. Do they work every time? No. Nothing works every time. You said, well, Bill O'Neill doesn't. No, he doesn't. If it did, he wouldn't have a situation to say limiting losses at 7 to 8%. They don't. So a clean and simple base, and this is why I'm so hung up on this, a clean and simple base will give you a clean and simple exit for a much smaller loss. You will be able to control risk much better. You see this right here, BPT? Remember we looked at the energy ETFs doing so well? You see this clean and simple base? This is vanilla. There's nothing fancy. See the volume pick up through the tops? That bar right there. Look at that. People talk with their mouths and vote with their pocketbooks. Hey, they voted. They were buying, and it made a nice move. And we bought that. We bought that. And it was a good run. Then we sold some into strength as it started to drop and locked in the profits. Sold some on the way up, sold some on the way down. But what's the key point here? It's a clean and simple base. If you focus on those, it works. Now I need to stop here and say this. This is important. Why? Why do clean and simple bases work so well? Like a company handle or a simple flat base? Team, we've had hundreds of stocks do this over the years. Why do they do this? Why is it so good? Why do they work? Isn't that what you want to know? Hey, Pat, I want to make money. That's what I'm here by, Joe. Why? Think about it. Everybody sees this. This is not fancy. A fourth grader could see this and say, yeah, it's going sideways. Gosh, I guess, you know, I can see that. I guess if it takes out those tops, cross that line, that flat line with volume, that'd be pretty good. Oh, there you go. I guess I'll buy some. There you go. Not a huge move, but it's 20% on your money in a couple of weeks. That's not bad. That's one of them. Clean and simple bases. Flip the coin though. This is the part I really love. Price is good above the line and it's bad below. So do we have to give it 7 or 8% losses? No. Off the record, Bill O'Neill said he wanted to keep losses much less than 7 or 8%. Okay. This is the beautiful part about what we do. And no day trading here. I don't scalp and I don't look at 5-minute chart. I'm going to look at a 5-minute chart this year. If I had, I'd be dead. It's too much. See these clean and simple tops? Price is good. It starts to go. If it falls well down below this line, drops below this line, you can sell it. One thing we have learned at Mission Winners, and this is from looking at a million charts through the years, literally, you know what to look for. And I'm sharing it with you. This is a gold mine right here, folks. When you're buying and you want to get to 100 shares, rules of proper pyramiding. You buy at the pivot, your first purchase is 50 shares. And I have to give a stipulation. This is really important. And again, this is CANSIM level 3 and 4. You're looking for good stocks and good groups in a good market, breaking out a clean and simple basis with volume. You got to satisfy those constraints. Your goal is to get to 100 shares. Your first purchase would be 50 shares. The price goes up a couple of percent. Your next purchase would be 30 shares. 50 shares, then 30 shares. Price continues going up. Your third purchase would be 20 shares. 50, 30, 20 for a total of 100 shares. That's CANSIM level 3 and 4. Yeah, I know I've got the stuff here too. For buying properly, adding onto a position. Now, what kind of a stock do you want to do this with? You want to do this with a stock that has these traits. It's in the top 40 groups. It has great earnings and are great sales, a chart pattern a sixth grader could understand. It's breaking out on heavy volume, has a high composite rating, and again, it's a leading stock in a leading group. Focus on those, and those rules of proper pyramiding really help.
And Pat, it would be great if you could talk about where you place your stop loss as well. After you make a specific buy point, where do you actually place that stop loss, and when would you sell some if it reverses from that clean simple base?
Great question. Let's answer. Richard, thank you. We'll answer that right now. Price is good above the line, and it's bad below. If I buy this pushing through this line, by the way, did it have good volume? Yeah, it did. Yes, it did. And we bought it in a crummy market. Folks, in a crummy market, right? This is working. It's good above the line and bad below. Addressing Richard's question, which is a great question. And you know what's awesome? This is why I love Mission Winners and working with Richard on things. It's the real world. What do we do? How do I manage this? What am I supposed to do? Good above the line, bad below. It lifts off. If this starts falling below the line by 30 or 40 cents, okay, I'm going to sell a third or a half my shares. It's that simple. And that's not day trading. It's looking at millions of charts through the years, knowing the biggest problem you have is the sucker goes and you can't get enough shares because everybody sees it. Goes, lifts, takes off. Next day you're tested. Okay, came right down to the line, but you're still okay. Stays above the line. Here's the bottom line, folks. Prices, I'll say it again. Price is good above the line and it's bad below. By default, and this is what we do, it helps us keep losses extremely small. If it starts to drop below this line, we'll sell a third or half our shares. For an 1% loss, 2%, if it continues falling, we'll sell the rest for a very small loss. One of the things I'm big on, I never want a big loss, ever, ever. By managing them like this, it really helps. But there is a stipulation here. Remember, clean and simple bases that everybody can see helps us keep losses much smaller.